Hi, can you hear me?
Yes, sir. We can hear you, sir.
Okay, very good. Yeah, thanks.
Yes, sir. We will be commencing with the event in 2 to 3 minutes, sir. We're just
Okay,
waiting for the participants to enter.
sure, no problem.
A very good evening to one and all gathered here. On behalf of the Economic Society St. Stephen's College, I would like to welcome you all to the 13th edition of the Vinod Chowdhury Memorial Debate. The Vinod Chowdhury Memorial Debate is conducted every year in honor of one of our most revered professors, Professor Vinod Chowdhury. Professor Vinod Chowdhury has played a pioneering role in making the renowned Department of Economics what it is at St. Stephen's College. We are honored to have Dr. Viral Acharya as a speaker for today's lecture. Dr. Acharya is an economist of renowned stature, and we are privileged to host him for our prestigious memorial lecture. We welcome you, sir. The topic for today's lecture will be some reflections on microcredit. Now, I will hand over the mic to my friend Amartya, who will introduce the speaker.
Thank you, Kevin. Now I would like to introduce Dr. Acharya. Dr. Acharya is a CV Star Professor of Economics at New York University Stern School of Business. In the past, Sir has held many important positions like the Deputy Governor of the Reserve Bank of India from 2017 to 2019 and the director of the National Stock Exchange of India. He has also held the he has also held the position of the New York University Stern Initiative on the study of Indian capital markets from 2012 to 2016. We are confident that today's lecture will give us some very useful insights on microcredit. We have an ardent audience waiting for you, sir. Now I will request Dr. Acharya to share his views on the topic for the lecture.
Thank you for this kind introduction. A very good evening to all the students and guests invited by St. Stephen's College. I'm delighted to be giving this memorial lecture. As you know, it's based on my recently released book, A Quest for Restoring Financial Stability in India, which is a recount of my time at the Reserve Bank of India. It binds together the various speeches that I had given as a deputy governor with a very extensive introduction called Fiscal Dominance, a theory of everything in India. And let me start by expressing the paradox of the Indian banking outcomes, which is that on the one hand, the Indian banks right now have among the largest non-performing assets ratio, which is that a very large proportion of the loans that they have made to the real sector of the economy have defaulted. One would think when one sees a statistic like this, that India has among the highest non-performing assets ratio, that there has perhaps been over-lending as a whole in the economy. But what you observe simultaneously, and this is the paradox, is that the credit to GDP ratio in India, which is how much lending is taking place in India as a whole, is actually among one of the lowest in the large countries. It is only 50 to 60%, 55 to 60% of our GDP. So what this together mean is that a lot of lending is happening to the large industrial firms, but not much lending is actually taking place at the last mile, in particular to the micro entrepreneurs who are setting up small firms. But these micro entrepreneurship is very important because not just in India, even in the United States, micro enterprises are the ones that employ the biggest proportion of jobs in the country. In the United States, in fact, micro enterprises contribute to 50% of the total jobs that are out there. In India, the number is smaller, not as high. Nevertheless, the micro enterprises constitute a very important part of the country. And the topic I want to talk about is based on chapter 7 of the book. There's a whole section in the book on strengthening public credit registry, creating records of borrower creditor histories through a public credit registry, and strengthening microcredit in the process. I'm going to share some of my reflections with you. This is actually one of my favorite speeches that I had penned down. It evolved quite a lot during my term at the Reserve Bank of India. It put in motion this creation of this public credit registry. It's still work in progress, but the Reserve Bank of India is implementing the registry as we speak. So sometimes when I sit down to write a new set of remarks, the same old thoughts cross my mind. A bit like one's favorite songs that are so deeply entrenched in your psyche that at the end of a long day, when you are just sitting by yourself, reflecting on the day or the subjects that preoccupied your mind, it is these songs that start playing all over again without any reason, without any conscious decision to rewind to these songs. In my case, sometimes there are a few striking images that flash across my eyes when I'm writing these speeches. I've tried in what follows to describe these images and what their collage together means for me. These images also convey how I try to think about economics and finance more generally. I think of them as vehicles to understand the daily situations of households around us and to derive insights as to how these situations that the households are facing could be made better. Most often, the regulators, such as a central bank, can do this only in small ways. But occasionally, an opportunity arises to do this with a big bang. Now, note that for an economist, it's quite important to think about these grassroots situations of households. After all, the origin of the word economics is in the ancient Greek term oikonomia, meaning management of a household. And in fact, what the now Nobel laureate recipients, Abhijit Banerjee and Esther Duflo of Massachusetts Institute of Technology, contend is that it is the poor households that practice the best economics because their costs in managing their households are very high. And if they don't manage their households well, also the economic costs of such mismanagement can be rather high. So let me describe these four images first, and then explain to you what it has to say about microcredit and how we can strengthen its provision. Image one. Many evenings or nights when I used to stroll with my brother on our terrace in Mumbai, we used to be greeted on one side by the Pavan Hans helipad, the sprawling slums of Nehru Nagar, the deafening din from Swami Vivekananda Road, SV Road. It's one of the arteries that goes through the western suburbs of Mumbai. And you could feel the serene breeze and waves of Juhu Beach. As a child, I grew up on a crowded street in Girgam in South Mumbai. And observing from our first floor balcony how people went about their lives on the streets was a favorite pastime for all of us children as we were trying to kill our afternoon times. And conditioned by that habit, while I'm on the terrace in Mumbai, my eyes invariably would end up focusing on the slums of Nehru Nagar to see what's happening there. And far into the narrow alleys, bustling and jostling in high density, are the slum dwellers. They appear from our balcony on the seventh floor of the terrace as diminutive figurines. But there's always much activity and life all around there. A man is often fixing a dish antenna on top of a blue roof. An old couple are perched outside a modest hut, savoring either tea or desi chaat. A woman is slamming blow after blow on the clothes that she has carefully aligned to wash. But almost always, what used to grab my attention was that, like any part of India, a group of children are always gleefully running around, mostly playing cricket, but occasionally also flying kites in Mumbai around December, January. Now, some of the evenings, because there's this helipad nearby and there's also the international airport, a plane would take off from the domestic or international airport in the east and head westward on its way, or a chopper, a helicopter would swing in and land at Pavan Hans with much acoustic fanfare. Now, as these sophisticated means of modern transportation would make their noisy presence felt, you could see the children bunched together, one of them pointing at the sky, others gallivanting around him to all marvel at this spectacle. An instant later, of course, the children would have nonchalantly gone back to playing their gully cricket or running to pick up the fallen kite. Now, if you see this image over and over again, the thought that crossed my mind, the hope that crossed my mind is that these children, in that brief moment of marvel at the planes or the choppers, one hoped that they would be imbued with ambition, that their eyes are now set on the sky, that they have all the initiative, and they get all the opportunity to do what it takes to bridge the gap from their narrow alley to the helipad next door. Or even to the giant mechanical birds that were just flying above them. But of course, a lot of questions come to your mind. Will these children take off? How will their journey be? Where will they land? You wonder for a few seconds, but the mind is so easy to distract. I would once again get back my attention to the honking of the SV road vehicles. So that's the image one from our terrace in Vile Parla West in Mumbai. Image two is a slightly past one. Until about 15 years back, I used to spend a decent chunk of my time as a doctoral student and then as a professor at London Business School working with an Indian non government organization called Pratham. Pratham focuses on pre primary and primary education. In fact, all of my proceeds from the book are earmarked for Pratham's work for education of underprivileged children and skilling for the youth. If anything, I recommend you to buy the book as a small contribution to Pratham. But when I used to visit India, I used to visit Pratham's work on the ground. It was my umbilical cord to India. I would visit their balwadis or daycares in the urban areas, and if my travel plans permitted, also go to the delivery centers for accelerated reading programs in villages. The importance of these visits for me was that when I came back to London or later on New York, if I had to go to people and various stakeholders, ask them to contribute for supporting Pratham's programs, my description of what Pratham does would be more credible, engaging, and vivid. But of course, these visits were also personally very rewarding. And one reason why these visits were so rewarding is because there are a few sites, if any, more uplifting than of a child figuring out the alphabet for the first time, reading the first book, flipping pages over and over again in boundless excitement and frenzy, or counting and adding up his or her collection of stones, subitizing them soon after, as in counting them without actually having to count. Uh, and uh, there is this innocent spark on the child's face, or that aha or the eureka moment when the child first discovers how to read, how to count, how to learn, whatever it is. But it really works like magic when you see this happen in a balwadi or in a village reading program. When you returned from these visits, it was like a shot in the arm to do more for Pratham. I always felt like nurturing this umbilical cord to India further. You also realize that joyful learning is an essential groundwork for the journeys, the flights, and the ascent that these children must be able to undertake in due course. So I'm gradually, as you can see, getting to the education of children. And let me now talk about image three and image four, which will now gradually get into how this education gets financed in the end. Image three. As I used to go to the Reserve Bank of India, which is in South Mumbai, from Vileparla, which is in the western Mumbai suburbs. Sometimes I used to go to Bombay Gymkhana, but that's also in South Mumbai. You again had to take the artery, the SV road, before you turned for taking what is called as the Milan subway, or now the Milan flyover, in order to connect to the Western Express Highway. Just before the turn, before you reached what is popularly a landmark there, popular landmark there is the Hanuman Temple and the Santa Cruz bus depot. On the left side, on the sidewalk, there is always a family. There's a mother. It's clear they are homeless. The family is homeless. And the mother would always be toiling away no matter what time of the day. She had at least two children. So two children would be around typically when you saw her, both roughly of the same age. And depending on the time of the morning when I left for the Reserve Bank of India, I would see that she had her work cut out. She would either be waking up the kids or bathing them with water from an ingenious water supply that she had figured out on the sidewalk. At times, she would be getting them dressed in school uniforms. And at other times, she would be running with the kids with their backpacks on, rushing towards the school bus or the neighborhood school. And when you look from a distance, it looked like the mother had a single minded focus of going through the chores and ensuring that her kids had a chance to get to the school in order to fly and soar. And a set of questions would start coming through your mind. How does this mother make it all work on the sidewalk? Can she afford the books and the supplies? Is she home when the kids come back? what job does she do? Because I had never seen her asking anyone for money, even though she was on the sidewalk. And then could she be in some ways a very tiny version of micro entrepreneurship? Is she a micro entrepreneur? What exactly does she do? What is her enterprise that allows her to actually do these activities in the morning and get her kids to school? As again, as I told you, the mind is so fickle. These images flash across your eyes every day, and yet, as the car would reach the flyover, you are once again preoccupied with your daily descent. Let me now come to image four. This is an image from early phase of my Reserve Bank of India term. I had visited a bank which used to be a microfinance institution, Bandhan. Um, I had gone to visit its premises on the outskirts of Kolkata in semi-urban setting. It was a Saturday morning. It was quite bright and sunny, and a banker carrying his thela, a shoulder bag, stepped into the passageway next to a series of kacha pakka homes. By the time you had blinked your eye, an army of about 20 women, mostly in saris, with ages spanning from 20 to 50, some even 50 plus, had gathered around this banker Thelawala. Uh, so, why did this gathering take place? They had all borrowed certain sums of money from this Thelawala, who was basically Bandhan Bank's banker doing banking with these women. All women made their payments one by one. Their transactions were logged into a physical register that the Thelawala was carrying. All the transactions were also digitally swiped onto their bank debit cards with a point of sale style machine. Some of the women then started borrowing again. Some took out some monies from their accounts. There was one person in this group of 20 odd women who was appointed as the registrar for that month. She checked all the transactions in the Thelawala's register and she signed off the log after checking the accounts carefully. So, for each person who had borrowed, there was a registry of what amount they had borrowed for what period, how much repayment did they make, did they take out any money from their account today, or did they deposit any money back, etc., etc. Banking, in a sense, was done with that Thilawala's meeting, and growth was about to begin. I was curious to know as I was leaving that gathering as to what these women were doing with the money. And interestingly, all of them without exception were entrepreneurs. They were micro entrepreneurs. One had started a sari trading business, buying them from Kolkata and selling them in the neighborhood and collecting a margin in the process. She was amongst the most experienced micro entrepreneur in this group. She had built her enterprise over several years and, in fact, was the recipient of the biggest loan, 1 lakh rupees, with the longest maturity of 1 year in the group. One of her friends had acquired a sewing machine with the loan and was stitching blouses to go with her friend's saris. To purchase a sewing machine, she had taken a loan with the sewing machine as collateral. In case she could not repay the loan, the Thilawala would basically have access to collecting the sewing machine because she might not be able to repay the loan fully. Yet another one, which is very common in these neighborhoods, had opened a beauty parlor. In fact, some of Pratham's skilling for youth is actually to enable some of the men and women to actually open beauty parlor and salons and make a living in some of these neighborhoods. Yet another one had started a soft drinks stall in her husband's stationery store, as there is extra unused space there in the afternoons when it's too hot for people to shop, but there are still some pedestrians on the road and they are interested in having a Coca-Cola or something like that. And it seemed that there was no shortage of services to be provided in this semi-urban neighborhood. I then got further curious as to what prompted these women to do this kind of entrepreneurship in the first place. And I did not anticipate or expect the answer that I got. In 9 out of 10 cases, The women had become micro entrepreneurs to send their kids to top English medium school or to have extra monies for private coaching so the child could excel in the state level exams, or to get their young kid to learn some computing and programming because they had heard that that is where the future jobs in India are. Now, as these four images flashed across my eyes on a regular basis, I realized that these were not compartmentalized. These images were all linked, that there was a connection between finance, my day job, and these images of the micro entrepreneurs that were going around. And of course, in the end, it was connected to the education of children and financial inclusion at the last mile. That if we can get microfinance to these women entrepreneurs, we would actually be creating financial inclusion in parts of India where access to finance is often an impediment to forming micro entrepreneurship. And if they are able to do the micro entrepreneurship, they would be able to get the next generation of the country into schools, to be soaring, to be flying, to be dreaming, to be reaching for the limitless sky and beyond. It is then not surprising that in economics and finance, access to finance is considered the lifeblood of an economy. It's judicious allocation. So getting credit to the right borrowers. As I described, the paradox in India is that there is too much credit for the large industrial houses who have defaulted on a large chunk of bank loans. So clearly there has been some bad underwriting or overlending that has happened there. And at the last mile, we don't have enough credit because India's credit to GDP is so low. So the judicious allocation of credit is known in research to unlock opportunity and growth on a sustainable basis. And as I was highlighting, it can in fact be a ticket out of poverty as the children get educated and get access to better jobs. Now, why does microcredit work in such settings? It works because a mother who's taking up an enterprise to shape her child's future has all the willingness to repay her debts unless there is some natural calamity like a flood or a cyclone or something that hits her neighborhood, or there is a medical emergency in the family. But leaving aside these disastrous outcomes, the reason why she has the willingness to repay her debt, it's because she wants to grow as a micro entrepreneur. She's not large already. She starts out very micro. She wants to become a small or a medium sized enterprise over a period of time because then she'll be able to earn more and spend even on better education possibilities for her child. Now, what does she need in order to grow in size? She needs access to more finance. To be able to access more finance, each time the thelawala comes to the neighborhood, she has to be able to demonstrate in the thelawala's register that she has been able to gradually take bigger and bigger loans and repay these loans on time. As time goes by, as she grows, suppose instead of one sewing machine, she takes three sewing machines to be able to stitch more. Maybe she will hire another worker. Think of the lady who is selling saris. Maybe she needs a bigger working capital in order to get some of the more expensive varieties of saris into these neighborhoods, or get a bigger stock of saris to reduce her having to go to Kolkata every now and then, or be able to offer more variety to her customers. So in some ways, this desire to grow creates what is called in economics as an incentive compatibility. The lender wants that the borrower repay, and the borrower, the micro entrepreneur woman in this case, has all the incentives to repay in the first place because she actually wants to be able to build a credit record in the registry of the banker and grow her borrowing more and more. Very often, what the microfinance institutions in India find is that these women are actually quite deft at handling their enterprises. And maybe the reason why they, in the end, don't default much on these loans is because they also generate a higher ability to pay through the deft management of the enterprise. Ability to pay is whether you have cash flows to pay the loan back in the first place. If you manage your enterprise well, Again, where is the incentive? Perhaps it's because you want to grow well, and that creates an ability to pay. Now, once you have someone having an ability to pay, so they have the cash flows and they have the willingness to pay, which is that they won't default on the loan because they want to keep growing, you can get finance in the form of microcredit to work. Because the financier can start with a small loan, use a short tenor to assess the repayment ability of the borrower, open a bank account so that you can also observe the cash inflows and outflows. And through all this credit registry, the banker can form a credit assessment, what is sometimes called as a credit score of the woman or the micro borrower. Now, this way, both parties are better off. The micro entrepreneur is able to expand the future possibilities for the family by educating her children. And the borrower, of course, charges a slightly higher rate than the deposits through which the Bandhan Bank is receiving money, for example. And they make some intermediation profits in the process. And this way, the ability of microfinance for micro entrepreneurs, the availability of microfinance for micro entrepreneurs thrives and benefits the society all around. So the question then I started asking is, what do we need to do in order to give a fillip to microcredit in the country? What can a central bank do? And the idea that struck in my mind is that if what that Thelawala banker is doing, going to the semi-urban area on the outskirts of Kolkata every week or once in a month, if that credit registry can be made publicly available to also other lenders in the economy, could that woman actually seek out more financing? Could she actually get banks to compete to lend to her so that she actually gets borrowing at the right rates and not too higher rate? If suppose her bank is not able to renew the loan in one particular month, can she actually go to another bank, show that, okay, in this digitized records, my history of credit transactions is all there. Will you want to continue to lend to me, even though my present bank is unable to extend the loan to me? And to this end, we came up at the Reserve Bank of India with the idea of a public credit registry. And in my view, it's an important step to democratize and formalize credit in India. Many micro entrepreneurs, like the ones I have described, even bigger ones than this, they exist in India all over through what is called as India's informal economy, but they are opaque to the lenders of the economy. In particular, let me just show you uh, what this opacity means. And the problem is, if the woman doesn't have that credit register when she approaches a new bank, she's unlikely to get a loan of the same size that she had earlier and at the same rates, because the new bank will have to start learning about her ability and willingness to repay all over again. So I'm going to share my screen. Uh, Let me see if I'm able to do that. There must be a share screen button here, right? Okay, let me see. Yeah,
Yes, sir. Yes, sir. We'll just let you,
yeah, yeah, yeah.
Yes, sir.
The
Now you
only
may,
thing
now you
is
may do so.
I'm a participant. You might have to make me a host
Yes,
here.
sir. I have enabled the setting
Yeah,
for
yeah,
you.
yeah. Perfect, perfect. Okay, okay. So as you can see, are you able to see this graph? I assume you are able to see chart one?
It's working.
Yeah, yeah, yeah. So as you can see here, India's credit to GDP ratio India is in the sixth bar from the left, is only 55.7% as of end of 2017. You can see that most countries are higher, most developed countries, and even countries such as Brazil, Russia have slightly higher credit to GDP ratios than India do. We seem to be in the company of countries such as Indonesia, Mexico, Argentina, but by no stretch are we close to the credit to GDP ratios of large developed countries. And as I said, this is a paradox because our banks seem to have lent a lot, but to exactly the wrong people when there are so many underpenetrated parts of the country where credit is not reaching in a large manner. So we thought there's a big opportunity here to rethink and reshape our credit ecosystem. Now, this opacity of the last mile or the informal borrower is called in economics as information asymmetry. Information asymmetry is when the borrower has more information about his or her ability to and willingness to repay than the lender does. And when the lender doesn't have such information, it leads to what is called as a market failure, which is that the lender will simply not provide credit to the borrowers. So, in order to improve the efficiency of credit allocation and expand credit in the first place, the world over, the lenders try to design systems, information systems, through which they can properly differentiate and appropriately price their loans. They want to decide on the interest rate. They want to decide on terms such as the maturity of the loan, what to take as collateral, etc., so that the lending can take place and yet the lender is not taking on too much of such risks. So, what was our vision? Our vision was that we must create a public credit registry. And what would a public credit registry do? It would be a database of core credit information, like a utility of sorts, which would provide a 360-degree view of borrowers to the potential lenders or the financiers. It would be linked to ancillary information systems, even outside the banking system, such as your GST and invoices. At the last mile, you might have utility payments. And at the very extreme, even if you are not making utility payments, maybe you are doing some basic transactions through your mobile wallets. And those financial transactions can also potentially be records that the micro entrepreneur should be able to use to convey to the financier what is the pattern of cash flows and the size of these cash flows against which the financier can provide a loan. So how would this look? Let me share the screen again. So as you can see here, the proposed public credit registry information structure would be this utility in the blue box at the center. Its primary information would be mandatory reporting by banks, non-bank financial companies, regulated financial institutions that would include microcredit and microfinance institutions. All of these entities are regulated by the Reserve Bank of India for most part. Second, and importantly, there would be an ancillary information base which is at the bottom. This would connect to the company records where there are unique company identifiers. It would connect to the legal database as to whether some legal action is or a litigation is underway on the borrower. It would link to the bankruptcy system. In case the firm has already filed for bankruptcy, the borrowers and the lenders should be able to provide transparency around that. It would report to the fraud database of the Reserve Bank of India. It would link to the GSTN, the Goods and Services Tax Network, where invoices are uploaded. It would link to the tax filings and the utility payments. And on the right-hand side are the potential users, which would include the borrowers, the creditors, the regulators, and various kinds of other data analytics that could be developed, which could be either through rating agencies or private credit bureaus, who would use this information to tell the potential financiers what's the credit score. So I was just mentioning about my book. It's on Amazon. You can go and look up what is the Amazon rating of the book. You can read the reviews and get qualitative information about the book. You are just a potential buyer. You may not have bought the book yet, and yet you will be able to get information about this rank. Now, if this information was not available, it would be harder for me to sell the book, and it would not be as convincing for you to buy the book in the first place, or which book to buy in the first place. The same way, a micro entrepreneur at the last mile should be able to provide an easy, transparent credit score to the rest of the system, saying, this is my credit score. I'm 8 out of 10. You can decide how you want to lend to me. But if these credit scores are not available, then banks may actually withdraw from lending to these micro entrepreneurs in the first place. So at the Reserve Bank of India, this a high-level task force was set up, which has now laid out the groundwork for creating such a public credit registry. Several aspects have to be put in place. The data by the borrower has to be shared only with consent. So you need a consent-based architecture. So of course, through Aadhaar, and the UID and its authentication, now we have a mechanism through which the borrower's identity can be verified by the financiers using the unique identifier almost instantaneously. Millions of such verifications are taking place every day in India. Second, then the borrower has to provide consent. So it would be a consent-based architecture to respect the confidentiality and privacy of the data for the borrower. Of course, those who are already in transactions with a given borrower will have access to this information. But if the borrower wants to give consent to a new potential financier, the borrower should be able to provide such consent. And finally, there are some legal aspects that have to be addressed. In most countries that have a public credit registry, there is a separate Public Credit Registry Act that enables the regulators to require that the financiers supply the information about the borrower's credit into a public credit registry, so that the data in the public credit registry are authentic, they are comprehensive, and if a financier doesn't report this data, the regulator can hold them to task in order to supply this data. So what is the overall dream, so to speak, from here? It is to help sachetize microcredit. Now, I've used the term sachetize here. What does that mean? If you recall, in 70s in India, the fast-moving consumer goods companies such as Unilever wanted to penetrate rural India, but they realized they cannot sell soaps and shampoos in rural India that are of the same size that they sell in urban India, because the average urban consumer had a greater ability to spend money at a given point of time. So if you took like a large shampoo bottle, there's no way that a villager is going to buy it because it's too large as a one ticket purchase for the villager. So the fast moving consumer goods were very clever and nimble. They figured out that all that we need to do is to create a sachet, a small packet which you can sell for just 1 rupee or 2 rupees in the village. You use it, you discard it, and that is in line with the cash flows of the villagers, because they don't have the cash flow to set aside for an entire bottle, but they can still buy the sachet and bathe and wash their hairs with the best quality ingredients that are available out there. The same way, the logic and the trick to lending well in India has to be that you have to do cash flow based lending. In India, the reason why the credit has been so extensive for the large houses is because information about the borrowers hasn't been great, and therefore banks do what is called as asset-based lending. They will lend as long as you have a big plant or a house or a machinery that they can potentially take and try to sell off when a bankruptcy case is filed and the borrower hasn't been able to repay. But micro borrowers, micro entrepreneurs, the women that I was talking about, to start with, most of them don't have collateral. Most of them, as I said, they are either selling Coca-Cola or taking saris and bringing from Kolkata into the semi-urban area. So you need to observe their cash flows. You need to understand what is the magnitude of the money that's going in and out of their accounts. And then you have to start sachetizing the loans in line with the cash flow structure. There is no point giving a loan to a farmer for 1 month when the harvest season is going to be 3 months from now. So you have to customize the lending transactions to the specific cash flow structure of these borrowers. And our hope is that the public credit registry can actually do this kind of sachetization, universalization of access to finance, democratization of credit in India. So let me stop there. Actually, what I have laid out to you is, in some sense, the foundation of credit transactions. The why the ability to pay and willingness to pay is very high at the last mile, at the microcredit level, but yet you need to break down the opacity of these borrowers so that the formal finance institutions such as banks, non-bank financial companies, microcredit institutions are willing to lend at the last mile and help growth unfold, help educate the children in these areas, and so on. As I told you, I try to approach economics through very common person's images, the images that keep crossing through my mind and the collage they created. They actually helped me with my day job at the Reserve Bank of India. The central banks should be able to see what the common person is doing. And I think the common person should be able to understand what is the role of a central bank in the economy. I described finance as the lifeblood of the economy. I often think of the central bank as the heart. It controls the pumping of the lifeblood to different parts of the economy. And you know, the public credit registry, in my view, is a way of declogging the arteries in order to get the lifeblood to the rest of the system. If you can declog these arteries, you can reach different parts of India, and credit in India can expand to levels in line with developed industrialized countries of the world. Let me stop there. When I started out, everyone thought that a public credit registry was too ambitious. It is too big an idea. It will never happen in reality. My sense is steps are on the way. It can be done. And I always used to think of this quote from the Italian great artist Michelangelo, that the greatest danger for most of us lies not in setting our aim too high and failing short, but in setting our aim too low and achieving that mark. So let me stop there and take some questions. I encourage you to look at the book. There's a lot of sound economics in there. It is explained in relatively simple terms. It talks about India's bad loans problem and how to resolve it. It talks about why we go through boom and bust cycles in India in credit through the banks, especially public sector banks, and what can be done about it. And towards the end, it talks about why the government shouldn't be trying to do too much, but it should leave some space for the private sector, the banks, and the central bank to function independently and at arm's length, so that the economy is like a wheel that's functioning on four wheels rather than just on the one wheel of the government. And so it makes a push for striking this balance. I hope you find it interesting to read. Thank you for the opportunity.
Thank you so much, sir, for such an informative lecture. There's a lot of knowledge and advice we can take back from this. Now, we would like to ask a few questions that have been suggested by our audience. I will now pass the mic to Ritik Gautam, who is a second year student of Economics and Political Science at St. Stephen's College. Over to you, Ritik.
Thank you, Kevin. Sir, we would like to tell you that we have received a huge number of questions for you, but due to the time constraints, we have selected only a few. I'll ask these first questions on the behalf of these students. The first question is by Gino James from St. Stephen's College. Sir, after the subprime mortgage crisis of 2009 in USA, Manmohan Singh and UPA, instead of allowing the free market to take over like US did, asked PSU banks to issue loans after loans to ailing companies. Do you think that was the first step to destabilizing the economy, with GST and demonetization being the final nail in the coffin? So we would like to know your views on this.
Yes, see, as you might have been reading on a regular basis now, especially over the last year, that different governments at different points of time come under short-term electoral pressures. They want to show that the growth numbers are very, very high and that our policies have worked. Now that happens the world over. Every government wants to show that our growth policies have worked. The question is whether the governments have the ability to actually influence credit outcomes to such a large extent that it can lead to this kind of boom and bust cycles. In the United States, they did it through the subprime lending. They offered too much credit against houses to even people who could not afford actually buying houses in the first place. And then, it all fell like a heap of cards, as they call it. In India, we did it to pump prime the growth of the economy after the global financial crisis when global growth started trending down. There was a lot of behest lending to infrastructure, power, steel, and many other sectors. You can't grow credit in a very short amount of time at a very fast pace because banks don't have the capacity to actually make the right loans. And in any case, if there's behest lending, the underwriting quality gets compromised very, very severely. So this process of the banks, it being easy to tell banks to make loans where you want them to go to or to sectors that are your preferred sectors. It may not be directed to specific individuals, but it could be to sectors as a whole. Then the bank loans going bad, then the regulator being forced by the government not to recognize the bad loans so that the government doesn't have to inject capital into public sector banks. This entire cycle, this delayed, protracted cycle of bad lending, then lending going bust, then it not getting fixed at all, and the borrowing rates for healthy borrowers in the economy remaining high or them not getting access to credit in the first place. In my view, this cycle is worse in India because of the presence of public sector banks and because the institutions that guard and govern the independence or operational autonomy of the central bank are not that strong. And therefore, we need to, one, both the government needs to gracefully divest its stakes out of public sector banks because it's becoming too expensive to keep funding their losses. They are not performing the function that they were supposed to perform of financial inclusion and development on the ground. And two, we need to strengthen the ability of the regulator to say no to the government and actually do its job of marking the books of banks properly and in time so that depositor interest, taxpayer interests, and long-term financial stability can be preserved at all times. And in the introduction chapter of the book, Fiscal Dominance, a theory of everything in India, I focus more on this independence aspect of the central bank and why it has become too tied to the fiscal needs, the short-term fiscal needs of the government. And then there's a very simple chapter, much along the ease of the chapter that I just narrated. It's called A Bank Should Be Something One Can Bank Upon. Actually, a TEDx talk for this speech, one part of the speech is also on YouTube. I encourage you to take a look at it. But then the chapter beyond the TEDx talk goes into what we need to do in order to fix the problem of the public sector banks. And I recommend these things very highly to you to look at if you want more further information on this.
Thank you, sir. That was very informative. Sir, our next question is, how do we incentivize microcredit models for private players, especially for certain displaced communities like refugees? There are certain areas under ambit of UNHCR in areas like Meena region and Cox's Bazar in Bangladesh, all have not proven to be partial success owing to rigid repayment schedules and credit unworthiness.
Yeah, I think the essence that I was just trying to describe to you was that this kind of lending at the last mile is indeed profitable, which is that just take the example of Bandhan Bank that I was mentioning. Bandhan Bank started out as a microcredit or a micro enterprise, microfinance institution. Then around 15, 16, it was allowed to become a bank and get access to credit, to deposit, sorry, by becoming a bank. It generates one of the highest intermediation margins in the country. So I think the idea that it is not profitable to lend at the last mile doesn't always seem to be bearing out. I think the problem seems to be that many private banks are not specializing in developing the right underwriting, monitoring, and recovery skills for that particular segment. As I said, in order to lend at the last mile, you have to do cash flow based lending. These borrowers don't have collateral to start with. You need to create credit registries of the pattern of cash flows that they can manage. And then you have to customize your lending transactions in order to be able to lend to these people and yet be able to get repaid and make a margin at the same time. But what the successful banks in this arena seem to suggest is that indeed it is possible to actually do this. And so I would actually think about the models that have worked and basically ask the banks that are not able to succeed in order to examine what it is that these banks are doing differently on the ground. My sense is that a public credit registry would facilitate this kind of intermediation for all banks in the economy, because as I was saying, if the lady selling saris wanted to go to another bank, she would now have the entire register of her credit transactions of the past, and then that information can be used by a potential new bank if they want to compete in the business with Bandhan Bank, for example.
Thank you, sir. So the next question comes from Deshna Jain from Daulatram College. She asks, how does political stability affect the economic decisions? Do we take strong monetary policy decisions even when the government is not up for the strong fiscal policy decisions? Sir, we are very eager to know your views on this.
Yeah, so actually, the first chapter of the book, which is called Fiscal Dominance, is focused entirely on this theme. So, what is fiscal dominance? In macroeconomics, fiscal dominance is a concept that was introduced by Thomas Sargent and Neil Wallace. It is a state of the economy in which the government borrowing or deficits are so large that because it risks, say, experiencing a significant downgrade, credit downgrade by the rating agencies, or because it may face even an outright default, the focus of the central bank becomes on keeping interest rates low and helping the government tide over its borrowing and repayments rather than focusing on long-term goals such as price stability or inflation. So the central bank gets fiscally dominated because it is distracted away from its long-term objectives by the dominant fiscal considerations. What happens with fiscal dominance is that because government deficits are often high because of short-term pump priming of the economy at the time of elections or to fund their pet projects, etc., that it doesn't generate long-term growth. Take India's fiscal expenditures. Most of them are subsidies. They are not actually investments in infrastructure that would lead to a stable creation of jobs and growth in the long run. Some subsidies are, of course, justifiable, but more than 90% of our expenditure at the center level and over 70% at the state level is actually in subsidies rather than in improving the ease of doing business on the ground, which would create long-term jobs of the right type in the economy. So then when the central bank gets dominated, it makes the fiscal situation untenable because the government's focus is what I often call in my A.D. Shroff Memorial Lecture, I called it as government playing a T20 and the central bank trying to play a test match. What is fiscal dominance? Fiscal dominance is when a test match player like Rahul Dravid is told in the middle of a test innings that you must play like a T20 because we have to entertain the spectators. That's the long and short of it. That's what fiscal dominance is, because fiscal pressures arise very often because the governments are trying to not do the right long-term adjustments. They want things to look more entertaining as far as growth is concerned in the short run. But of course, if you play a test match like T20, most of the times you're going to fail in the test match, even though once in a while in a given session, you might have an extraordinary outcome. And so in that chapter, I actually described, I always thought that a central banker should approach the economy like Rahul Dravid. The most important thing is to know where your off stump is, and you should know what balls to leave outside the off stump. There will be very attractive balls to hit, but very often what happens is that you end up going for these rank bad balls and you end up throwing away your wickets in the process. But in a test match, you can't do that. You have to actually secure financial stability. So you have to guard against depositor losses. You have to guard against runaway inflation. You have to guard against rapid depreciation of the rupee. And all of this sometimes require making sacrifices. It requires that you undertake some short-term pain while making infrastructure investments, health investments, investments in education that are not going to give you the growth multipliers in the very next quarter. These are going to come at a horizon of 3, 5, 10 years time. So I fully agree with you. In my view, the monetary policy should not give in excessively to the fiscal needs unless there is a commitment that the fiscal path is going to come back to maintainable, sustainable levels in the medium term. If that credibility is not there, the monetary policy risks getting fiscally dominated and allowing inflation to run away because it is so preoccupied with helping the government tide over its financing problems.
Thank you, sir. That was very interesting to hear. Sir, our next question is from Punjab University, Harshita Goyal. So she asks, will privatization of PSBs really help in enhancing microcredit given the trust of depositor still solely inclined toward PSBs during the crisis? So what are your views on this?
Yeah, so the fact that the depositors still trust the PSBs is actually their strength, so to speak. I think what is required is to reprioritize some of the PSBs. See, not every single PSB has to be a universal bank that lends at the last mile, lends against houses, lends to the largest industrial borrowers. Why can't some of the PSBs be focused microfinance or microcredit institutions? Let them specialize and acquire the expertise in underwriting, monitoring, and recovering on these last mile loans. That kind of reprioritization will be required. As I was saying, there are very profitable banks in this space, and some public sector banks, precisely because we keep justifying their presence on the basis of financial inclusion. It would be far desirable if their models were specialized to do this, because it's profitable, it's socially valuable, and then they won't be throwing taxpayer money after large industrial loans. By the way, not only that these large industrial loans have defaulted, there has also been very high incidence of fraud, outright siphoning of funds out of the bank loans into pockets of some of these borrowers, where the money can no longer be traced, either because some clever accounting tricks have been employed or because the money has left the country and you can't chase these funds anymore.
So it was very enlightening to hear from you. Thank you, sir. Over to you, Kevin.
So we are glad to have several professors from the Department of Economics at St. Stephen's College here at this lecture, hearing your lecture. So we would like to invite them to ask a few questions,
sure,
if they have any.
Kevin, could I ask a question? This is Poonam Kalra.
Yes, ma'am, absolutely. The floor is open.
Yeah. So, Dr. Acharya, I was wondering if inflation targeting, which has been criticized, the fact that you're constantly looking at inflation and not the overall financial picture, what is your view on, inflation targeting as an objective for any central bank? Thank you.
Thank you, ma'am. I think that's a important question, especially in the context of the ongoing review that's about to start in India of this framework. I think what is getting missed in the entire discussion about inflation targeting is this concern of fiscal dominance. Inflation targeting is not just because low inflation generates beneficial outcomes for the economy. That is also the case. In fact, Augustine Carstens, who is the general manager of the Bank for International Settlements, he was invited by Governor Shaktikant Das to Reserve Bank of India for a talk during my last 6 months. And he gave a talk where he said that the best thing that the central bank can do for financial inclusion is to keep inflation low. Because if inflation is low, savers actually save money in financial assets rather than in gold and real estate. And if savings in the economy get financialized, it's easier to create formal access to finance for everyone and at lower borrowing costs. But even if you leave that aside, whether low inflation is good for per se, whether a particular target is at the right level for the households or not, the real problem is that governments that have been allowed to dominate their central banks into adopting easy interest rate and liquidity policies, primarily to meet their own expenditures, have repeatedly had episodes of runaway inflation. Argentina has defaulted 9 times in the last century. Many wartime debts have been funded by the central banks, monetized by the central banks. For some governments, it has worked out okay, but for many, it has actually led to a financial crisis that has followed. In fact, the book by Carmen Reinhardt and Kenneth Rogoff, this time is different, is really about how when government debt to GDP exceeds a certain level, the thresholds they estimate are around 90% or so, growth in the economy starts coming down, financial crises follow, and because of the financial crises that follow, a certain amount of output of the GDP is lost forever. It never comes back because you are not growing well for several years while recovering out of the crisis. So, in my view, the central banks should really be viewed in a democratic framework as a checks and balances framework. We know that the government horizons get short term, no matter how well intentioned they are most of the times. But when the electoral cycles have specific time points, their horizons will get short. They will try to use the central bank and the banks to keep interest rates low, throw credit at the economy so you can get a short burst of activity. And you need that an operationally autonomous or an independent central bank be able to throw sand in the wheels of this exercise by not giving in excessively to allowing runaway inflation tendencies to take hold, be able to supervise and regulate banks at arm's length so that credit excesses are not allowed to take place the way they happened after the global financial crisis. Last point here. So, what is inflation targeting framework? In my view, it's a contract between the central bank and the rest of the economy, and actually also the rest of the financiers. So, not just to the households and the domestic investors, but also to foreign investors. It's commitment that even when your governments have short term electoral pressures, the central bank will stay focused on the long term objective of keeping inflation at bay. If you don't have this commitment, then when the pressures rise, you will get very quick unraveling of the credibility of the central bank. You can have depreciation spirals on your currency because foreigners will want to pull out before inflation rises and the currency depreciates. And household inflation expectations can start becoming unhinged or unanchored from the targets set by the central bank, and that can lead to a wage spiral and through that a further inflationary or growth impact depending on how it plays out. So in my view, we need to persevere with the inflation targeting framework. I understand the government's fiscal deficit needs for relief and repair efforts at the moment. But the primary culprit there is not monetary policy. It's been the fiscal excesses of the government over the last 10 years. They have simply done balance sheet fudges in order to show that the fiscal targets and debt to GDP targets are being met, whereas actually they were slipping for most part of the last decade. And so what is needed for the economy is that the government adopts a robust set of fiscal institutions so that they can build credibility with markets, investors, and rating agencies that when they say we are targeting 3.5% of fiscal deficit, that they mean business. And they are not going to allow the deficit to run up to 7.5% or through off balance sheet transactions. So, my sense is that trying to compromise the central bank's inflation targeting framework because the government has not actually run its finances well would be like saying that the judiciary or the election commission should get compromised because we want the governments to actually do certain things in the short run. And so I'm putting the central bank in the same pedestal as institutions that we would not want to be touched by government short-term pressures, such as the judiciary or the election commission. And that was really the key point of the A.D. Shroff Memorial Lecture. I think it's the classic rules versus discretion debate in economics. And the central bank needs to adopt certain rules and stick to them, because if it is given too much discretion, it will get dominated and it will end up playing T20 and losing the test match in the long run. Sorry, it was a very long answer.
Thank you. Thanks a lot.
Thank you, sir, for such a nice answer. Um, we would love to have one more question from our faculty members. So if any of the faculty members wish to ask a question, please do go ahead.
Oh, Kevin, if there's no one else, can I ask? Yeah. Okay.
Yes, sir.
Thank you, Dr. Acharya. So I'm Benston, I teach in the economics department. So my question was, what you're proposing, something like this registry. So microfinance institutions especially had innovated to get around the information problem by group lending. So asking them to self-select into groups. Now, something like a registry is certainly going to help an individual borrower sort of have an independent history and have and establish himself there. But will this have to be combined with regulations on the lender too, especially in the context of public sector banks, where the incentive conditions of what the lender could be the manager there would be looking at, and there could be a principal agent problem over there. So, and priority sector lending or something like that hasn't really helped us so far in really getting down to this last mile thing. So will your registry proposal, will that have to be combined with some kind of regulations on the lender also in getting to these sort of, because they could still do the lending in their own sort of a way?
Yeah, I fully agree. See, as I was saying, we basically need a reprioritization of certain business models. I think what has happened is we are trying to do everything through too much of a supply side push. Priority sector lending is again a supply side push. And what many banks end up doing is that they just figure out regulatory arbitrages, which is how can I classify an urban borrower as a priority sector loan. And in the end, it is not achieving much. If anything, sometimes because they are forced to make loans that they would otherwise not make given their business models, they just operate at lower profitability and they can't actually do other kinds of lending. Priority sector norms also keep getting changed based on where the government wants more lending to take place at a given point of time or the other. I'm fundamentally not a big fan of the supply side push in choosing how to allocate credit in the economy. It reflects, in my view, it's sort of an overhang of the centralized, nationalized structure of the economy. As you know, RBI used to set sectoral limits for banks to lend in 70s, and that kind of credit allocation system doesn't take you very far. Now, coming back to your first point, I fully agree that all of this has to work with whatever mechanisms are in place on the ground to actually recover loans well. I think the default and the stigma that are associated with a default in in a group are of course very important mechanisms to generate willingness to repay in those settings. I think the point of a public credit registry would be more about enabling these entrepreneurs to become big. I think what is India's problem? Actually, today there is a very interesting report that has come out from McKinsey on how to create jobs in India. And this is an extension of the research that they have been doing in the past. And what they are finding is that one fundamental difference between India in the last decade and other countries that have grown very well on a sustained basis, say like South Korea, for example, is that our smaller firms are not able to make it big in a large number. Only a very few of these firms are able to actually grow big, and they are all very limited right now in the tech space. In tech space, we are able to see a lot of small startups that are becoming unicorns in a very short amount of time. But in the rest of our traditional industries, actually small firms are remaining very, very small. They are not able to grow. And one question, of course, there could be many reasons. One reason is that maybe the large borrowers are never exiting even when they default. So there's no space being created for small and medium-sized firms to actually get their market share. In fact, I have a friend, I'm Gujarati, so I have some friends who are in the space of gems and jewelry and diamonds in Mumbai. And they always said that, the small guy is never getting a loan from the banks. And you find, and, of course, on the side, many of them knew that certain gems and jewelry outfits had problems of their own. But they found that those firms were always able to get credit from banks. And so there's this misallocation of credit that, we need to allow these smaller guys to actually be more in the space of borrowers that the banks find it profitable to lend. So I think my hope is that the public credit registry doesn't disturb the last mile lending model of the microcredit institutions, but that as these micro entrepreneurs are trying to grow, it helps them formalize so that they can take registers of their credit accounts to bigger and bigger providers of finance, and through that finance can facilitate their entry. Now, of course, if there is no capacity to enter in terms of the real side itself, because the large firms are never exiting, of course, we won't be able to fix this problem. And so we do need the cleansing of the legacy loans and creative destruction of the large borrowers who have defaulted, also to give the smaller entrepreneurs a chance to actually become large in our brick and mortar sectors.
Thank you.
Just one point. I have put two links actually in the chat room. I think it isn't going to everyone, but maybe the host can find some way of sharing it with everyone in the process.
Yes, sir. Yes, sir. We have received your link and we'll share
Okay,
it. We'll share it to everyone.
Very good.
So, as you know, this memorial lecture is held in memory of our late Professor Vinod Chowdhury, one of the most renowned professors of our college. However, due to unforeseeable circumstances, Professor Chowdhury's sisters were unable to join us today, but they would like us to express their heartfelt appreciation to you on their behalf. They are grateful that Professor Chowdhury's legacy can continue with you giving the lecture this year. Since Professor Chowdhury's sisters aren't here, we would like to call upon Professor Benston John, the staff advisor of the Economic Society, St. Stephen's College, to say a few words.
Thanks, Kevin. I would like to keep this short and also start by thanking Dr. Acharya, first of all, for agreeing to give this lecture. And even in this pandemic times, we could get this sort of legacy of ours going and also have such a renowned speaker. I think even though the pandemic has given us a lot of stress, otherwise, this is one opportunity that we have got, like where people sitting all over the globe can sort of now connect and be part of many events like this. So it was wonderful sort of hearing Dr. Acharya today. And I think this is perhaps one of the most important lessons that a student can get in his initial years of doing economics, to approach economics from the common man's perspective. And when you see a brilliant economist doing that so well and talking about his research in such a manner, I think that's a great inspiration to our students. And we thank Dr. Acharya for doing that so well, and also making it very clear how important the central bank is as the heart of the economy. And we already know what wonderful work he did to try and make that heart healthier while he was here, and also still continuing some of that work through his contributions that he has already done. So thanks, Dr. Acharya, for this. And we would also like to thank the family of Professor Vinod Chowdhury for helping us continue with this and supporting us all these years. And this year they couldn't make it, but they usually visit every year and be part of the lecture. That's something that the sisters always do without any fail. We are very thankful for them for all the encouragement that they've given us. Professor Vinod Chowdhury, actually, I belong to the last batch that was taught by Professor Vinod Chowdhury in college. It was in my second year, in the summer break following the second year, that Professor Vinod Chowdhury suddenly passed away. So he taught economic history to us, and that was a specialization of sorts. He taught several batches, economic history and contemporary and economic development. So these various specializations, and he was a brilliant debater. He introduced, he could debate extremely well, both in English and in Hindi. He introduced parliamentary debating to Delhi University. So it was Professor Vinod Chowdhury who started parliamentary debating in the Delhi University circle, and we know how well it picked up later on. He also had his society called the Commonwealth Society running, and he used to work very closely with embassies and take students to lectures and debates over there and train them well. I would like to thank the Economic Society for continuing with this good work and helping put together all this even during this trying times. I would like to thank also the department, everyone in the department, for their participation and support, and also everyone who has joined and helped make this event a success, even though we are struggling with a lot of other issues. Thank you. Thanks a lot.
No, thank you very much. Indeed, it's been my honor and privilege to give the Professor Chowdhury's memorial lecture. I think, as you said, one thing the educators, the academics, the professors, teachers do is leave a lasting legacy in the minds of many of the students. I think if any of you have actually seen the book I was mentioning, Quest for Restoring Financial Stability in India, it's actually devoted to one of my school teachers who passed away 2 years back. His name was Shailesh Shah sir. And I'll just share a little bit of a story just to combine with the inspirational role that Professor Chowdhury has played for St. Stephen's College and the Economic Society. We in our school, I was in a Gujarati school called Fellowship School in Mumbai. There was it was a very balanced school in terms of cultural heritage and music and all the other diversity that a student should have. But the school had never had a student in the merit list of the state, in the top 50 students in the SSC board exam. So around the time I was in 8th grade, Shailesh Shah sir, as we used to call him, along with some other teachers, they developed this challenge that fellowship school can also do it. And some of us were just lucky to be right around that time. And he mentored all of us, actually. In my case, he actually mentored me for 3 years in languages and humanities without charging my parents a single rupee, actually, because it was for him as much of his challenge as it was to help me. And I think he left such an indelible impression on my life. And so I'm very grateful to give me an opportunity to honor one more such teacher and educator. And I'm happy that in some small way, just like I'm able to pay homage to my own teacher, I'm glad to be able to pay homage to the teacher for St. Stephen's College. Thank you so much for the opportunity. Okay, and I wish you all and your loved ones the very best of health and safety in these challenging times. I hope the India health curve subsides soon. It was pretty bad in New York in March and April. Things have improved, so I can offer that as a silver lining of what may be in store in the coming months. Thank you. Take care. Bye.
Sir, before you leave,
yes.
First of all, thank you so much for sharing such a touching and inspiring story. Before you leave, sir, I would like to call upon Siddharth Arora, a second-year student of economics at St. Stephen's College, to deliver the vote of thanks.
Once again, very good evening to all ladies and gentlemen. I, on the behalf of the Economic Society, would like to thank Dr. Acharya for taking out time on this very interesting domain of microcredit. And thank you for taking time from your busy schedule. It was truly a pleasure to learn from you this evening, sir. Also, I would like to thank the principal of the St. Stephen College, the bursar of the St. Stephen College, and our staff advisor, Mr. Benson John, for giving us the opportunity to organize this lecture. So thank you everyone for coming in. We hope you had a very informative evening, and please check out the latest book written by Dr. Acharya, The Quest for Restoring Financial Stability in India. Thank you.
And also to all the participants, we will be mailing the link that Sir Viral Acharya has sent to us. You will receive it on your emails really soon. Thank you.
Okay, thank you. Take care.
Thank you, sir. Thank you, sir, for coming.
Yes, sir.